All right, so we want to welcome you all to our webinar workshop this morning, this beautiful Thursday morning. We appreciate you spending just a small part of your day with us. My name is Brian Griffin, a marketing assistant here at Messer Financial Group. Now, many of you are already familiar with Messer Financial, but in case you do not know, we are an agent-focused FMO located in beautiful Mint Hill, North Carolina. Now, we started with only 2 agents, but we are now serving thousands of agents across 40 states, and we are still growing. So today, we're going to be learning about Securian Financial. Now, they are a giant, actually, I say a quiet giant in the life insurance industry. They were established in 1880 with nearly $1.3 trillion, that is with a T, in life insurance in force, and more than 21 million customers throughout North America. They have great products and rates, and somehow they seem to sneak underneath the radar. And we want to make sure that you know exactly who they are. So today, we're going to be speaking with Michael Langenfeld and David Mccoy. Now, Michael, he's been a sales manager with Securian Financial for roughly 6 years, covering most parts of the country. Prior to that, he was a case designer and did training in the field. But in his spare time, he likes to play golf, good choice, and watch his 16-year-old play soccer and hockey year-round. So he has a very well-balanced life. So before we do get started, I want to go over the housekeeping rules. Now, we're going to hold all questions until the end of the presentation. If you do have questions, type them in the box on the right-hand side of your screen, and we'll address your question at the end of the presentation. So now, without any further delay, Mr. Michael Langenfeld and Mr. David Mccoy.
Hey, thanks, Brian. I really appreciate that. Thanks, everyone, for allowing us to come on today and speak with your group. We really appreciate it. This is a new office for myself, or a new FMO. Like I said, I've pretty much covered the whole country in the past, and now I'm really focused on the East Coast. So this is a great, and I'm trying to get the message out. Brian, you said it great. I mean, we're a very large company. We're the 8th largest life insurance company currently, but we are kind of a quiet giant, like you said, really under the radar. So we're really trying to get that message out. And obviously, with the current environment we're in, I've spent a lot of time speaking with groups, and really it's more of a reintroduction. My message has always been, I want to talk about company strength. I want to talk about ease of business with us, and I also want to talk about our solid products. And I did put together a small deck today for myself and David Mccoy to go through. At the end of this, I will make sure that I get all the marketing pieces that I'm going to reference. I will get them to Brian. I will also get a lot of the phone numbers that is going to make life a lot easier for you in the field. So I'll make sure that's all there for you. So there's no need to write everything down and get all the notes. I'll make sure that you get everything. Again, I'm Mike Langenfeld, sales manager with Securian Financial. So my job is to go out and promote Securian products to FMOs, BGAs. I also work at the agent level. With me, and he'll be speaking here in a little bit also, is David Mccoy. And David works with me at Securian, obviously, and he's our business development consultant. He is a huge resource for me and for the field. He is pretty much our expert at the home office in all products Securian and outside of Securian. So he's great at the benchmarking. He's great at telling you what's going on as far as industry updates. He just really keeps us all informed on what's going on out there. And what's great about having him on the call today is I'm going to have him speak a little bit later about AG 49. Obviously, that's a huge thing that's going on in the industry. I want him to give a quick update because I think people need to understand what's going on there, what the decisions are going to be, and how that's really going to help Securian Financial, because the way we set up our products in the past and how we're setting them up going into the future with our new products that rolled out this year. Real quick, contacts in the field. I want to make sure everyone is aware that Michael Barata is one of your wholesalers in the field. So he will be available, and I'll make sure you have his contact information. He also has a case manager that works with him that will help you if you haven't spoke to Lindsay McCain. But again, I'll make sure you have that information for case management and operations. And then also I will provide at the end of the call or on the email, you have a whole team at Securian of case design team, really. And they're there to answer all your product questions. They're there to run all your illustrations. They're just really there to help you with anything you need to know about Securian Financial. I'm going to jump right in here to the agenda so we can see that. Let me see. There we go. So here's our agenda today. I really want to talk again about Securian Financial Company strength. We're going to talk about our policyholder treatment story. That's huge for us at Securian Financial. We really value that. And again, we have a marketing piece on that I will get out. But, you know, we are a mutual company. I really like to promote that and the things that we're doing behind the scenes to make it fair for all clients across the board. I'll touch on some resources available to you as advisors. Obviously, you're not able to have wholesalers in your office generally. You're not able to see as many people as you used to. So I want to make sure that you're aware of all the things that we've set up here at Securian for advisors to go and get information on anything that you need. The second thing that I'll really get into a little bit, and again, this will all be kind of high level, but I want you to be aware of it because I've spent a lot of time talking about ease of business. We are trying to make it so easy for you to do business these days. We've even put together kits that will take you from step one all the way from the prospecting all the way to the client handling of their meetings, because we really can't be face to face right now. We want to take you through the whole thing and make this as easy as possible for you. Then I'm going to have David touch on AG 49, give some industry updates, and then we're going to get into our products. We're really excited about the new products that we rolled out this year and some of the special riders that we have. So first off, I'm just going to jump ahead here, and this is just one slide I like to show. Again, it kind of mentions that we are the 8th largest insurance company in the nation that Brian mentioned earlier, kind of a quiet giant that not everyone knows about. This one says 1.2. We are at 1.3 trillion in life insurance. So I just want to put this slide up there so you kind of realize that we have a huge scope when it comes to the size of who we are. Value of ratings. I think this is important too to kind of promote. Like I said, it's all about company strength right now, ease of business, and solid product. Like I said, that's kind of my tagline that I've been going with. We are currently at a 96% Comdex. And what I like about that is basically we've been increasing since 2018. So we're actually at 93. There's a lot of companies that are struggling right now, obviously. There's a lot of companies that are going the wrong way. We have actually increased our Comdex rating. In fact, I was just speaking with someone on our financial council the other day, and we just got our Fitch report back on May 8th, just the other day. And they just affirmed again a AA rating for Securian for our strength, and that's a very strong. In fact, that's the 3rd highest that they give of all their 19th ratings. And I cited some of the stuff in the report. I read through it. It was boring, but you know, the one things that I got out of there is that Finch said that we're extremely strong capitalization. We're well positioned to manage through uncertainty, and we have an incredible ability to pay our claims. So, you know, that's just one thing that I really like to talk about. I want everyone to know about our company strength. I'm going to go right back up to our agenda because now I'm going to kind of jump over to our policy treatment story that I mentioned earlier. This is very important when you're speaking with your clients about us. Again, we are a mutual company, so we have no pressure to deliver short-term returns to shareholders. And when I say our treatment story or our policy treatment story, the main theme of that whole thing is that we treat everyone the same. We offer the same crediting, we offer the same rates across all our products. So basically what I'm trying to say there is if you were to, caps are big. Let's just say caps are something that we talk quite a bit about when it comes to life insurance, IUL, for example. So it doesn't matter if you bought a product 10 days ago or you bought one 10 years ago. We have this same crediting. We treat all our clients the same. We don't wall off business. We're not going to, you know, lower caps like a lot of companies do. They'll lower their caps on their in-force and they won't do it on their new business because they're trying to attract new business. We don't do any of that stuff. We never have. In fact, since 2006, we've had 50 product updates throughout those years, because we opened up our first IUL Eclipse in November 2006, and ever since then we've had 50 upgrades, and we've had different IUL products, and we've added that to every single product. Like I said, we don't wall off anything. If we have a new account, we put it on all the other policies. One thing, and I'll let David jump in here too, because I think this is important. We added a bonus index to our policies just a few years ago, which basically said you could get a bonus if you've been with us 10 years. So we went back and added that to all our policies that were open in 2006 that didn't have that on that, and they were able to get bonuses. I believe we were 8 years into the product before we traded this. Is that right, David?
Yep.
Roughly. Yeah. And then so people who bought an Eclipse in 2006 were all of a sudden able to get bonuses to infuse cash into their cash value within 2 years. So David, can you explain a little bit how that bonus index works now and going forward?
Yeah, so just to kind of reiterate a little bit real quick what Michael's been saying. So if you go back to 2006, the initial IUL contracts that kind of hit the market, bonuses weren't really a thing yet at that point. And so what we did is we came out with our bonus, 8+ years later. And rather than all of a sudden starting a brand new product and anybody who purchased the contract going forward would get the new bonus, we did retroactively go back and add that bonus to those who have already purchased the contract. And, one of the examples that I like to think of is, if you're purchasing a product, you may go on the internet, you may see, okay, well, I get a 1-year contract with this company, and maybe I get the lowest price that they can possibly offer. But after that 1 year is expired, in order to actually get that same contract again, you would have to be considered a new customer. And we want to make sure that that's not the same case for our policyholders. So what we'll do is we'll make sure that we can retroactively go back and give any of the cool new features that we've added to the contract to anybody who has already purchased one, if we possibly can. The way that our bonus works is on the new contract, it is a rolling 10-year period, and the client would get 1% of the total index credits earned over that rolling 10 years. So years 1 to 10, 2 to 11, 3 to 12, so on and so forth. The total index credits earned over that amount of time, they would get 1.5% of that on our new contract. And for our older contracts, it was very similar, and we actually even grandfathered them in. So again, the bonus kicks in year 10, and even though we didn't add that bonus until 8 years later, when we did add it to our older contracts, we didn't make them wait another 10 years. Instead, they were already 8 years into that 10-year period, so they only had to wait maybe 2 or 3 years after we added the bonus to their contracts to already get their first bonus. So it's definitely something that we really pride ourselves in. The bonus is one example. Another example that I like to use is our low volatility index that we introduced with Orion. So it's an uncapped index that we introduced with Orion, and it was very popular. In fact, it was about 40% of the money that we were getting was actually going specifically into that index. And again, going back to our policyholder treatment, what we actually did is we added then that index back to, again, our old Eclipse contract that did not have that index available to them. So that's another example of us trying to make sure that we're doing everything we possibly can to our policyholders without forcing them to have to get the new shiny object in order to get some of the new features that are extremely popular on our newer products.
Okay, thanks, David. I really appreciate that. So, like I said, we have a nice marketing piece on the policyholder treatment story, but I just think it's a huge benefit from us as a company to provide something like that, and it's a great story to tell your clients. Before I kind of move into the ease of business, one thing I'd always like to touch on also is, because I know we have a lot of advisors on the line today, resources available. I mentioned it earlier about how our case design team is there and ready for you. We have about 8 people on that team, and I'll provide their phone number and their email address later in an email that gets sent out, but they're there to help you with everything. One thing that we have done also is we've created microsites. And I'm gonna send a list of these microsites. You do not have to be registered with us. You do not have to log into our system. They're just basically nice microsites, and I'll send you a list of them that you can click on, and it will take you to any part of our business, any part of Securian that can really help you get information on things. It can also help you find answers to questions. We've got microsites that deal with our financial strength. We actually have one that has an AG 49 update. We have one on Secure Care, which is our linked benefit product that we sell. Underwriting updates. We have microsites that can go to advanced sales. So if you want to get into and talk about premium financing, if you want to talk about executive benefits, anything like that, we have all these resources available for you. And again, I will send the micro links. I will send all the phone numbers. Just know that we have a lot of resources here at Securian that can help you out, so you're not always searching for the answers, because we're here to help. So just want to make that point. I kind of want to now talk a little bit about ease of business. I said earlier that I'm kind of 3 things that I'm promoting this year: strength of the company, ease of business, and then also our new products. So with ease of business, I'm talking mainly about our electronic application, our right fit, which is our accelerated underwriting, e-delivery, drop ticket, these types of things. Obviously, you can't get in front of your clients like you used to for a while. So we're trying to make business as easy as possible for you. So I just want to give kind of a high overview of each one of these pieces that we've put together for you. And then we also, again, we have teams that go to all these, so, and you'll have those numbers. But we did create a kit, just so you know. It's called a Remote Sales Success Kit, and I'm going to send that to everyone also, and it's a link. And what that link will do is it'll pretty much open it up, and it will take you from the prospecting stage through our servicing stage. And it will have links to everything. It'll get links to the e-app, to the right fit, the e-delivery, our drop ticket, if that's something that you want to use. But if anyone's not familiar with our electronic app, it's basically, it provides an easy way for your clients to complete, your applications online, anytime and anywhere. You can do everything electronically with your applications, and you can access this through Securian website, or if you have a iPipeline link, you just add our product to it. And now if you're, and I'm talking more at the FMO level, the BGA level, or even with the advisors, if you have a website or something that you really want to promote, I can send a link to you too for your clients to be able to go right into that. You can also, even when you run illustrations with our systems and with iPipeline, if you run an illustration, you have the ability to send that right into the e-app, and it all pre-populates. So we're just trying to make everything as easy as possible. And I can tell you that it's working. I've really been pushing electronic apps. At the end of 2019, we had about 74% of the reps, which is huge in the industry, were using an electronic app. Just at the end of last week, we're already up to 84%. So we've seen a huge uptick in people using electronic apps. The nice thing about the electronic apps, and the one thing that we offer that I want to touch on, is Right Fit. Now, Right Fit is our accelerated underwriting. Basically, it allows you to go through and get a policy within 24 hours without any lapse, or basically any lapse. So we can turn around and get an app out. We can have the electronic app done, we can have the underwriting done, we can basically have a policy delivered within 7 days, basically. But the Right Fits, what's nice about it is we'll allow you to, and actually we just increased this, so anyone between 18 to 50, they can get up to $3 million of coverage through our Right Fit. And when you go through the e-app, you have the ability to choose if you want to use Right Fit, which is our accelerated underwriting. So basically, you can get up to $3 million of coverage if you're 18 to 50, and then also $1 million of coverage from 50 to 60. So that's available right there. And our usage right now, just so everyone knows, for our Right Fit is tops in the industry right now. If you were to go through most companies, and I've done the research on this, and I've talked to our head of underwriting, a lot of companies have accelerated underwriting and they go through their systems. The average out in the industry right now is about 50%. So if you were to go through and do an electronic app and want to get accelerated underwriting, the average is about 50% that you'd qualify for that, where you could go through without the labs. We're at 68% right now. So 68% of the people that are applying for Right Fit are getting through the system, and they're getting an answer within 24 hours. So, you know, we're pretty proud of that. The average face that's coming through is almost 600,000 too, and age is about 38 years old. So I will send that information out to you also, but I just want to really focus on the ease of business. We have everything here for you to get you from starting from putting the e-app in, going through accelerated underwriting, the e-delivery that will send the app, the policy right to them. Everything can be done online, and we'll make that easy for you. Now I kind of want to jump back into product a little bit and kind of bring David back in. AG49, I want him to go through kind of an update on what's going on in the industry right now, because I think this is huge from a standpoint of Securian Financial. As everyone knows, AG49 kind of came about because of the situations that were going on in the industry as far as how things were being illustrated. Things that were being put in front of clients. And when I talk about that, I'm talking about multipliers and indexes where people were able to show returns that maybe just aren't what they should be showing the industry. And AG49 is kind of bringing all that together, and it's kind of making a level playing field for everyone. And David's on top of this right now, and he's got some updates for us, because I think once the decisions are made on what they're going to do, this is really going to benefit Securian Financial. We never played in these high multiplier games. We never had the high fees. So it kind of hurt our sales, I'll be honest with you, because we weren't playing in that field. But now with the new rules we think that are be coming out, it's really positioned us because we don't have those high multipliers. It's not in our new product. So I'll bring David on to just kind of give an update on that, and then we'll move into our products.
All right, thanks, Michael. So if we want to take a step back here a little bit, for those of you who are not familiar with AG49, it is the Actuarial Guideline that came out actually back in 2015. And the purpose of AG49 was to help make illustrations for IUL contracts maybe a little bit more conservative, as well as making it easier for the client and the agent to kind of compare from a company to company basis. So what they did is they actually dictated what a carrier was allowed to illustrate based on the cap and the floor of their very generic vanilla S&P 500 capped account. So if you had a cap of 11 and a floor of 0, then you should be illustrating very similar to company B, who also has a cap of 11 and a floor of 0. So sounds great in concept. You know, the theory behind it was positive in that we're trying to help the clients, help the agent, make it, again, easier, simpler for comparison purposes. Well, the life insurance industry has some very, very smart individuals. So anytime there is some type of a rule or new regulation, typically there are maybe some loopholes that are found and utilized from a design perspective to kind of help enhance the performance of their contract. So in came the multipliers, and again, multipliers kind of the buzzword of the IUL industry right now. You know, I would say the overwhelming majority of the carriers out there at this point have a multiplier of some sort. It kind of started with multiplier bonuses, and then eventually it kind of transitioned into the multiplier indexes and riders that we see today. And the benefit of a multiplier is, at least illustratively, you never get a 0. And anything then times 0 is 0, which means you don't actually see the downfall of some of these multipliers in the years that the returns maybe aren't as strong as what you thought. And unfortunately, good, bad, or otherwise, I mean, you and the clients, you're going to get zeros. It's just going to happen over the life of the contract. So it's again, it's a slight advantage illustratively by not showcasing any zeros on the contract, but it is something that clearly the industry as a whole has understood that needs to be addressed, because over the past probably 6 to 8 months now, AG 49 is in the process of being reopened specifically to address those multipliers. Some of the returns that we're seeing on these illustrations now on a year-over-year basis can be over 12%. So back to 2015, we were trying to address it because we thought that the returns of, we'll say, maybe 8.5% were too aggressive. And now we tried to dial it down, and now we're actually in a situation where some of these illustrations are in excess of 12%. So again, the industry has understood that there's a problem, so we're reopening AG 49 to kind of address this. And what we've come to the conclusion of, and there's been a vote by a group called the Life Actuarial Task Force, and the direction of the revisions to AG 49 is going to be multiplier and non-multiplier products are to be illustrated equally, meaning you no longer would get the benefit of the multiplier on an illustration versus not having a multiplier. So that's really good news for us. We decided that we wanted to take a slightly different approach than what the rest of the industry went, which was, the more we charge, the better it looks. So in came the super high fee, high multiplier designs. Again, we didn't feel that that was maybe in the best interest of the client, not necessarily that the multipliers are a terrible thing, but illustratively, both the agent and the client may at times not totally understand what it is that they're selling, or in the client's case, what it is that they're buying. Because really what's happening is these products are now leaning maybe a little bit closer towards the variable side in terms of aggressiveness than what they had in the past. And that may not be exactly what the client thought that they were purchasing. So we went the opposite route again with our new Eclipse Accumulator contract. We actually went extremely low charges, simple, easy, transparent, no gimmicks to it, very straightforward. So now if you were to actually look at us from a benchmarking standpoint, we're either going to have the lowest in terms of total charges in the industry, or within the top 2 or 3, depending on the cell that you're looking at. So again, very low cost, low charges. We want to make sure the money that the client's sending in is going as much towards the indexing portion as we possibly can, and not towards these additional fees, as well as making it simpler and easier for everybody to kind of understand what it is that they're purchasing. So that's the direction that we went. Now, the good news is again, with AG 49 and us understanding that the route that they're going is that multiplier, non-multiplier products are to be illustrated equally. Those carriers that do offer these high multiplier products are going to see a drastic decrease to their illustrative performance, which can be a tricky conversation to have with the clients after their first year or two, when you're doing an annual policy review and all of a sudden their in-force illustration may look like it took a 30 or 40% decrease in performance, even though they may have hit a cap over the past couple of years, and that's because of the new regulation that's coming in. So could make for some tricky conversations going forward. With our product, you'll be able to avoid that because we're already in a very good spot in terms of the design component for the new regulation that's going to be coming out. If I was to guess, I'm guessing it's probably going to be somewhere around in the October range that we'll probably see a decision made. The world that we're in today has kind of pushed things back a little bit further than what we expected, but October is probably my guess. Don't quote me on that. And then I wouldn't be surprised if implementation was as early as maybe the beginning of next year. So.
Okay, thanks, David. And a great point there is the case review. And I don't know if they made a decision yet on that, David, but I know with the new rates that you're going to be able to show, you may not be able to show on in-force either. This will affect in-force. Have they made that decision?
They haven't made the decision yet. It's up in the air. I'm sure you can guess that the carriers that are offering these very high multipliers with high fees are pushing very, very hard throughout this to make sure that the in-force illustrations are not impacted because there is a huge concern by them around future replacements. Again, getting back to all of a sudden running an in-force illustration 2 or 3 years later and the product not looking nearly as strong, and then having to get into the decision, well, that's because there's these high fees and the high multipliers that we can't show you anymore. Then the client may say, well, I didn't know that that's what I wanted. And so, there's there's a lot of discussions that are still being had. We don't know. I'm guessing that there may be some type of a compromise in there at some point. I just don't know what the compromise is. So it's still possible. The first round of AG 49 did retroactively get put in place for all in-force contracts. So it's possible that it could happen again with the new update that's going to be coming out here in the next few months.
Yeah, because a lot of these cases were sold using the illustration, and you're showing a distribution, and you might have done well in the market, and then you get an in-force and you have a case review and you can't show it nearly how you sold it, and you might have done well, and they look at it and they see a 30-40% drop in the distribution number that you'd showed them when you sold it. So that would be a tough conversation. So I can see where they are worried a little bit about the AG 49 and what they're going to be able to show on the in-force side. So thanks, David. I appreciate that. And David's correct. This really positions us really nice with our new products because we stayed away from all that. So I kind of want to move into our products. We've got 4 products that I really want to talk about. Kind of give you a high overview of each of them, maybe a couple of points on each one, and then I'll have David step in and maybe give some comments on how we look and where our sweet spots are. As far as our story right now, everyone knows Securian since 2006 on the independent side, we are an IUL shop. That's kind of our flagship. We've always been kind of an IUL shop. We've dominated that market for many years. We were top 3 in sales for a good 10-year period. We've fallen back a little bit, mainly because of the AG 49 and the illustration game that we weren't playing in, but we think we're strong again. So right now we do offer a term product, and I'll get a little bit into that because there's some nice riders on that I think we should know about. Again, we have our IUL. We have an accumulation side and we have a protection side. We also have a variable UL that I'll talk about. We did just roll out our survivor IUL. We had to get up to speed on the new CSO tables, so we're rolling out our new products throughout the year, and obviously with what's going on, it's put us at a little bit of disadvantage, like a lot of companies where we've had to hold off on some of these products being rolled out. But we did just roll out a survivorship product also. So one thing that I get asked quite a bit about also, and I'll mention it, is whole life. We have been in the whole life game for many, many years. Currently, we do not have a whole life on the shelf. Our goal is to roll one out, hopefully first quarter 2021. And we're going to bring something to the market. So, but as of right now, that is a space that we are lacking here at Securian. So first product I want to talk about is our Advantage Elite Select. It's just, obviously this is a term product, but there is something that I'd like to talk a little bit about that I think's unique in the industry. I'll just put up here why Advantage Select. These are your basic stuff that you're going to see on most products that are term. We've got a 10, 15, 20, and 30-year duration periods. Pretty standard stuff. A convertibility is a big thing that we talk about here at Securian because we allow you to convert to any permanent product that you're allowed to sell. A lot of companies will limit the product that you can go into. We don't do that. As long as you can sell it, you can convert into it. These are a few of the riders that we have on our term. The 2 that I'll touch on are the first 2, extended conversion agreement. Basically what that is that it extends the ability to convert to a permanent product. If we go back to the last page here, you see our conversion periods for example, 10 and 15 are for 5 years. If you add the ECA on there, you have the ability to convert it to, you have basically the duration of the term. So instead of 5 years, if you have a 15-year term, you'd have 15 years to convert it. So it just extends the life of it, which is kind of nice. The other one that is unique to the industry here is the chronic illness conversion agreement. And I don't believe there's anything out there like this from the research that I've done. But basically what this does is this allows you to underwrite at the time of your term for chronic illness. Because a lot of times people have their terms and the goal is to eventually convert that to a permanent product. And a lot of times, since they're buying a term, they're looking for a protection-based product, and that would be our Eclipse Protector 2, which is our IUL with a no lapse guarantee on it. Well, that's a wonderful product to add a chronic illness agreement to it. And basically our chronic illness agreement is a indemnity dollar for dollar spend down. But this rider on the term allows you to underwrite it at the same time that you underwrite for the term. So when you do convert, you don't have to go through underwriting. You can add the chronic illness without any underwriting. So you may have younger clients who don't think about long-term care. They don't think about chronic illness. They just want a term policy for 20 years, but they can underwrite for chronic illness. A few years down the road, maybe this becomes important to them. Maybe they have a health issue, a health scare. When they can convert to that permanent, obviously they're not going to go through underwriting. If they have the chronic illness on there, they don't have to underwrite for chronic illness agreement either. It's all taken care of. Is there anyone else in the industry, David, that you know that has this type of rider? Because I don't believe there is.
No, there is not. So there are a couple carriers that offer a chronic illness agreement on their term contract. However, the way that it works is it is a discount method. So while you have the term, if you were to actually exercise the rider, your death benefit, will go down by a larger amount than what you're actually getting in benefit. Whereas this is going to be your more true $1 of death benefit is equivalent to $1 of benefit.
Okay. There's just a few more stats on the chronic illness conversion agreement. So issue age 16 to 60. The one thing you do have to do is you do have to put that extended conversion agreement on there. So basically, if you do underwrite for the chronic illness, you'll want to add the extended conversion agreement. That gives you the complete amount of time of the term to convert over to the permanent and add the chronic illness. Eclipse Accumulator. Now, this is kind of, I'm going to say it, this is our flagship product. We've always been known as a IUL cash accumulation shop, going back to our Eclipse, our Orion, our Omega, those products that we rolled out to the field. It's always been kind of our bread and butter. And this is the product that really we hope is going to push us to the next level after the AG49 situation kind of plays out that David talked about earlier. This product, again, it goes in the complete opposite of the rest of the industry. Like David said, the trend has been high fees, high multiplier product design. This basically goes the other way and is all about low charges and simplicity. And I'll get out a piece later that kind of shows how we stack up against the competition. It's kind of an analysis of the fees, and it's a really nice piece that you can use with your clients. But again, it's low charges for more accumulation. It's transparency in mind. I mean, most advisors that I've worked with can't explain a multiplier. So I think it's just a straightforward, easy product to explain. And again, and David mentioned this earlier, we offer a nice index bonus in year 11. David, do you want to add anything to that as far as where you see this fitting the best and how we stack up against the competition?
Yeah, I mean, kind of as Michael mentioned, I mean, our strength right now is really going to be in that low fee. The product itself is very competitive. What has put us at a slight disadvantage, again, at this point, is that we're just not doing the multiplier game. Not doing the multipliers means that illustratively, we're not getting that additional benefit that other carriers are kind of taking advantage of at this point. So what's actually going to happen is once this regulation officially goes into place, it's going to look like all of a sudden our product got instantly significantly more competitive, when in reality it actually has been just as competitive all along. It's just that the other carriers had to kind of come down to earth a little bit in terms of what they're allowed to illustrate based on the product features that they currently offer.
Okay, thanks, David. I put the product highlights up here for you. I'm going to have David explain one of our index accounts that is new to this product. We do have some loan options, actually one that's kind of unique. There is a rider there, an optional agreement that's been very popular in the field, Index Protection Flex Agreement. I'll just give you kind of a quick overview of this. This basically allows the client to get more money infused into their policy if they agree to have the death benefit paid out in installments. That's really what that is all about. So for example, let's say you had a $500,000 death benefit, and this is all about helping the insured and the owner grow cash value. It's not so much on the beneficiary side, but a lot of people don't want to give, you know, a $500,000 or any amount of money directly to a beneficiary. But what the income protection agreement does is it basically allows you to have that paid out in installments over a certain amount of time, the death benefit. And while doing that, and since we'll have the money a little bit longer to invest, we'll infuse cash into your account. And there's a lot of factors that go into it. And when we run illustrations, we can talk a little bit more in depth about it. But basically, that's what that is. It allows an insured to have the opportunity to grow more cash value for distribution and retirement. And the exchange and the trade-off is the death benefit upon their death is paid out in installments. And I'll get a piece out on that. Here's one of the new index accounts that I want David to touch on. I just think this is kind of unique in the way that this is set up. And the Rainbow Index account, not my favorite name, but David, can you explain a little bit about how this works and one of the options that you can choose?
Yeah, so this kind of continues our simplicity story, and where this actually came from is one of the main questions that I would receive on IUL contracts is, well, which index account should I be in? And when I respond with, well, I can't predict the future, so I can't really give you, you know, which one is the best one. And then the next response is, well, okay, well, which one would you choose? So this is kind of addressed at, again, the simplicity and trying to help specifically answer that question. So the Rainbow Index actually utilizes the S&P 500, the Euro Stocks, and the low volatility, which are 3 index accounts that are individually available if you wanted to actually invest in them kind of on their own within the contract. But if you don't want to pick and choose amongst those 3 individually, the Rainbow Index kind of does the best of all worlds. So what it does is it takes 50% of the highest performing of the 3, 30% of the next highest, and then 20% of the third. So it kind of avoids the issue around, you know, what if you were 100% in the Euro Stocks and the S&P 500 happened to be the one that did extremely well in the Euro Stocks, maybe didn't do so well. So this is kind of meant to be almost like a set it and forget it type of index account where you don't have to worry necessarily as much about choosing the right index, because just by default, it'll automatically take, again, 50% of whatever the highest performing 30 and 20 and so on and so forth. Or you do have the ability, like I said, to actually individually invest in those 3 however you want, or you can do a mix and match of the 4. So again, the focus of this, just like the product itself, was the simplicity component of it, and this kind of adds to that story by taking maybe some of the guesswork or decision making that you have with some other products out there out of the equation.
Yeah, when I was a case designer for years, it was probably the #1 question that I got from advisors. They'd always say, what would you invest in? Well, this is a great way to answer that question. It's a great way to push them toward it. Something that can get them involved in all the indexes that we offer. The last thing that I'll point out on this product is our loan options. We have our standard fixed indexed, which is a 5% contractually always, and then our variable interest rate loan. So obviously, if you're going to call in and ask for a distribution, and let's say the rates are at like 3.5, you're going to go with that. But you always have the option of the index, which is contractually at 5. One thing that we did add to this that I hadn't seen in another contract before was the short-term loan that you can take. It's basically just a 90-day interest-free loan if it's paid back. So I always like to point that out for a short-term emergency. If needed, that loan option is there. Eclipse Protector 2. Now, obviously, I talked a little bit earlier than David about the Eclipse Accumulator, which is our cash accumulation focused product. This is our protection focused product on the same chassis, Eclipse Protector 2. Now, we used to offer an Eclipse Protector, and at the beginning of the year, we rolled out Eclipse Protector 2. Basically, with the CSO tables, we had to update our products. We found that this was a great opportunity to reprice this product. And this was designed for affordable premiums, and basically it's lifetime protection with a no lapse guarantee on it. but you also have cash accumulation opportunities. What's nice about it, it's a no lapse guarantee on there generally, or what you would add on there. And you can dial that to anything you want. You can go all the way up to pay a premium up to 120 to have it guaranteed to 120, or anywhere in between. You know, you can guarantee it to 80, 90. You can set it. It's not determined for you, so you can set that. You know, this product, I will say, is most competitive on our short pay scenarios, especially we built this for single pays and 1035s. You know, Eclipse Protector, the original one, was really a leader in the marketplace. And from what David's told me and from the stats that I've seen, this product is actually about 4 to 8% cheaper than our previous product. So we really went with our same theory we were talking about earlier about trying to get low cost. So this is even cheaper than our original one. Like I said, 4 to 8%. What's nice about this is it does have a chronic illness rider that we talked about earlier. So when I mentioned the term earlier about how you underwrite for chronic illness, this is the product that everyone would convert into, and then you'd add the chronic illness to this, which is our dollar for dollar indemnity rider. So that's the great product for that. And it also has cash potential within this product, because again, it is an IUL. So I'm going to send out a piece later that'll show the cells that we're in, and it'll show how competitive this product is. We call it a heat map, so you can see within every cell how we compete against our competition. What's really nice about this is that this product is built and it's so inexpensive right now that we are really competing in the GUL market actually, and you have cash accumulation opportunities. So I'll let David step in and just kind of hopefully confirm what I said as far as where the product is positioned and as far as pricing.
Yeah, so that's all pretty spot on. Again, really where our niches with this product are going to be is specifically in that single pay and short pay design. We are very competitive in the full pay. It just so happens that short pays and single pays is kind of where we really shine at this point. And as Michael mentioned, you know, it is a product that has a no lapse guarantee on it, which just by default means that we're going to be competing against some of the fixed GUL contracts out there. But the big difference here is the fact that there is that cash accumulation potential. So you have the option of maybe 3 or 4% higher in terms of premium versus one of the lowest cost GUL contracts on the market. But the biggest difference is with the GUL, typically after about 10 years, there's going to be no cash in the contract at all. Whereas with this contract, you still have the ability to accumulate a pretty good amount of cash in the contract to either have access to at a later date, gives you some flexibility with the premiums, or maybe it just gives you an escape plan where, you know, if 20 years down the road, the client just simply doesn't need the contract anymore, they would be able to walk away with the cash in the contract versus walking away essentially with absolutely nothing because there's no cash in it. So.
Right. And obviously with the GUL not having much cash, and if you miss a payment, you know, or a couple of payments and you're past your grace period, you're going to lose that contract. With the Eclipse Protector, you're going to have cash value in there that you can use to pay your premium and keep that going if there's times where that's needed. So we'll get that information out, but I think that's a great point to as far as how we compete against the GUL market as another option.
And today is a perfect example with the environment that we're in, where, you know, those missed premiums could actually be coming into play. So,
yeah, thanks, David. The last product that I really want to touch on is our Value Protection IUL. Again, I keep pointing out we're an IUL shop. This is going to be on our Value Protection on our variable side. I think this is a great story. In fact, David was just talking to me about this product last week and how well we're positioned right now. Basically, we rolled this product out a couple of years ago to compete with Lincoln VUL1. They basically dominate the market when it comes to that, and we felt that we had a great product that we could roll out to compete against VUL1. So I was just, this is it's similar to our Eclipse Protector too, because it's going to have a no lapse guarantee on it, but it's going to have a mid duration guarantee, that's going to carry you, and then we hope that the non-guarantee will carry it out to age 120. The market that I've seen for this one is about 45 to 65, usually about a face around 1.5 million. And again, this is a great product to pair with our chronic illness rider. But I want to go back to kind of our competition there with Lincoln VUL1. Again, that's why we built this product. And when we first rolled it out, I would say, Dave, we were probably number 1 or number 2 in most cells across the board. I mean, they kind of owned the 1035 market, but we built ours for kind of a life pay. David just made me aware the other day that they have increased their fees. Was it about 16% on average, David?
That's right. Yep.
Yeah. So, oh, sorry. So David was mentioning to me yesterday that they increased their fees, and this puts us in a great position because I think across the board in almost all cells, we're winning that the fee battle and the pricing battle against the Lincoln VUL1. I think it's around 9 to 11% cheaper across the board. Is that true, David?
Yep.
Okay. So if you're selling the Lincoln VUL1 or you're looking at the variable IUL market, I think this is our best story out there right now for what we can offer. I mean, they are the leaders in that industry. We're right there. And now I think we've taken that over as far as fees and what we can offer. You want to add to that, David?
Yeah. So the product that's going to compete directly to VUL1 is actually going to be called our VUL Defender product. And again, so VUL Defender, we came out with a couple of years ago, and we designed it to be essentially a clone of VUL1. You know, Lincoln over the past several years has been the absolute staple of the variable market. In fact, if you go back maybe 2 or 3 years from today, they probably did more variable sales than the rest of the industry combined. So they've been very large in this market for quite some time, but we created the VUL Defender product specifically to compete against it. And at least initially when we rolled out the product, we were still very competitive. Typically, we kind of owned the 20 to 45-year-old range for full pays and short pays. And then in that 50 plus range is typically where VUL1 took over, as well as on their single pays, because they actually did build the product to be a 1035 product. So nobody was really able to even touch VUL1 in terms of single pay scenarios. Well, with the environment being what it is today, they did actually have to announce a pricing increase earlier this week. As Michael said, it was about 16% on average. So at this point, our VUL Defender product is actually taken over as the cheapest product in terms of the premium for the lifetime guarantee, if you were to match it up specifically against VUL1. So again, they're essentially clones to each other. It just so happens that with their most recent reprice, it went from us just kind of owning the 20 to 45 range to essentially our VUL Defender product is now going to be the more competitive product across the board.
Thanks, David. Brian, I think we're going to turn it back over to you and see if we have any questions. That's kind of the material that myself and David wanted to go through today. Like I said, I want to touch on company strength, ease of business, and really kind of talk about some of our products and how we're competing. And again, I will get an email out to you for all the microsites, all the phone numbers, all the marketing pieces. I think that would be beneficial. But I'll turn it back over to you if there's questions.
Absolutely. Michael and David, thank you guys for going over that information. One thing I do know, a lot of our agents are asking about, different IUL options. Some of our agents and some of the questions are kind of geared towards this, are just venturing into doing IULs besides just your basic term and things like that. So, I mean, this is great. This is one of the reasons we wanted to introduce you guys to our agents. Before we get into questions, I actually do want to, we actually have our very own marketing director, Michael Cologne, who actually does have a relationship with Securian as far as having product with you. and he wanted to give just a quick testimonial about his experience and the service that he's experienced with Securian. Michael, are you there?
Yeah, I'm here. Can you hear me okay?
Absolutely. You're loud and clear.
Awesome. Thank you for that, Brian. I appreciate it. Yeah, I just wanted to say, guys, I've been with Messer for 6 years or so. I've been in this business for 13 years. When I first heard about the strength and the possibility of what I would consider more advanced life insurance cases like these IULs, whole life, whatever, I read books about utilizing these types of products to, basically use it for a piece of my retirement portfolio and to be able to, I heard things about, being able to pull money out of this thing tax free. And then when I die, my wife and family will get, my death benefit tax free. And I started thinking about all this and I was like, man, this is really one of these types of products that I really, really want to have for myself. And I first learned about them maybe 5 years ago, but I had cold feet. I was like, I'm not really sure. Do I go with whole life? If I want to go down this kind of advanced life case scenario, do I go with an IUL? And I wasn't sure, and I never pulled the trigger. So I waited about 5 years, and then about 2 or 3 years ago, I was doing my own research on a policy for myself. Now I have term life insurance. I've got several term life insurance policies, but for something that I can keep forever, for something that I can use for tax-free retirement and everything else, I was looking at then it was actually Minnesota Life, and then it got and switched over to Securian Life, and I actually ended up putting one of these policies in place for myself, specifically with Securian, for all of the reasons that Michael has listed off, right? Company strength, longevity, just like innovative kind of riders that you can put on your policy to make it work the way that you want it to work. And of course the flexibility of premiums, all these different things I was having to take into consideration. So I just wanted to say for all of you guys who are on the line, if you are looking into getting in this kind of product line to offer to your customers, whether it's your senior clients offering it to their grandkids, or if you're looking for something, if you're not saving for retirement right now, nobody's saving for you. And I'm not saying that these kinds of products are the end all be all, but I really think that if you're it should be a piece of your retirement portfolio for sure. And obviously the longer you wait, it's not going to work quite as good for somebody who's maybe in their 30s, 40s, early 50s, especially if you dump a bunch of cash into it. But I just wanted to take like a minute or two just saying, look, guys, for myself, for me, for my family, me being a broker, me having access to every single insurance company that's out there, I decided and chose to get Securian for a policy for myself because I believe in their products, I believe in their company, and they are super strong. And I actually, just a couple of weeks ago, I pulled out my policy and I had one of the guys review it with me. I said, okay, look at how I designed it. I had help designing it. I had my contract, sold it through Messer, right? And then I turned around. I was like, can you please review my policy 2 years later? I just want to make sure that I'm on point. And he was like, everything looks awesome. You're right on point to hit all the numbers, all the predictions or whatever, with the percentages and the growth in your policy and everything that you've got. You're on par to hit where you thought you were going to be 2 years ago. So that was really, really reassuring to me to let me know that I made the right decision a couple of years ago. So I would say for you guys that are out there that are trying to break into this space, you definitely need to have Securian in your portfolio. They're very, very strong. I have had no problems or issues with them, and I've been very pleased myself. So I just wanted to sing a couple of praises to these guys. Thank you for listening to me. And Brian, I'm just going to kind of turn it back over to you for questions.
Awesome. So, it's always great to hear something from someone that's actually using the product and is happy. And I don't know if Michael or David, if you wanted to respond to what Michael just said.
Well, no, I really appreciate that, Michael. That's great to hear that you had that. The one thing that kind of stuck out that I just continue to point out, and David mentioned earlier, is when you had your case review and you went back and your advisor said you're right on point and everything's moving along perfectly. I mean, that's a situation I think a lot of companies are going to get into when they run those in force and they try to have those case reviews. They're not going to be able to show what they sold. So I think our products are set up. Again, I keep going back to these these high rates that everyone was showing. So that's good to hear that everything was on track for you. And I think that's
Awesome. Awesome. All right. So Michael and David, if you guys don't mind, we're going to get into just a few questions here that did come in. And we will get started with the one I kind of touched on already. It says, I've primarily sold basic term and whole life, but I want to start moving to IULs. Do you have a certification or in-depth training for me to transition to IULs?
Well, you don't need to be, I don't believe you need to have a certain certificate to sell an IUL. I would recommend this, is I would use our case design team. I was on that team for about 3.5 years, and I spent probably the majority of my time getting cases from advisors that would call in, and they'd kind of explain what they have. They'd say, this is who I'm dealing with. This is what their goals are. This is how much money they have. And we kind of walk through that, and we build a case together. And then I would help them explain how the illustration worked. I would help them explain how to sell it. And honestly, since I'm licensed, I did a lot of it for the client. And there are some people on the case design team that would even offer to do that. So I did a lot of 3-way calls where I would help the advisor sell the first couple of them for them so they could see how the process works. So I would really promote our case design team to help you with that. Now, again, we've got some pieces online that we can share. And I think if you use those microsites that I'm going to send, that'll help also. Dave, do you have anything you'd add?
Nope, I think that's pretty much spot on.
Yeah, I would really utilize our teams that we have in place to help you walk through your first couple of cases and work with your clients.
With you saying that, I think that I can't stress enough the value of having a case design team, especially if you're someone that's really kind of transitioning. You may not have a full grasp as to how to properly structure an IUL, which obviously is very important.
Right.
So anyone that is thinking about these products, you definitely want to take advantage of that. I know that that's something that I will. So that's awesome.
And Brian, it's not so much explain to them, the concept of the IUL. A lot of the advisors, and for right or wrong, they're selling these products based on the illustrations. And a lot of people have no idea what they're looking at. They're just seeing all these numbers. So we can walk you through the best way to use an illustration also to sell the product. Understand all the columns, understand what's happening within the illustration, because they do use those right or wrong to sell product and to sell cases. So we can help you with that also.
Great. That's great. So next question says, is there an age cutoff for right fit?
Yeah, and I'll get that up. But right now, our right fit, our accelerated underwriting is 18 to 50. We've pushed to $3 million. And then from 50 to 60 is $1 million a face.
Okay, awesome. And kind of in that, no, go ahead. I'm sorry.
Oh, no, I'm sorry. I was just adding that we just recently made that change. We went from 2 million to 3 million because of what's going on, to really open that up. I mean, we're in talks all the time. We'd like to even up the age too, but so we're constantly trying to make it easier to do business. But right now it's 18 to 50, 3 million, 50 to 60, 1 million.
Okay. And then also along that same vein, are all levels available through Right Fit? And I think they're talking about like preferred through standard.
Yes. Yep. You can get all the top ratings through Right Fit.
Awesome.
Yes.
All right. And I think you've kind of already answered this, but because I know you're an IUL shop, but an agent asked, do you have fixed annuities or will you be offering them in the future?
I believe we do. That's a whole different side of the business. I can get the wholesalers' contacts for you. In fact, I'll include the annuity and I'll also include the Secure Care wholesalers and wholesaler teams in an email, because we have kind of 3 separate divisions at Securian, with our life, Secure Care, which are our linked benefits plan, and then also annuities. So it's a different part of the shop. I believe we do, but I really can't.
Yep, we do.
Yeah. Okay, David, we do. So. And I'll get the
Okay,
wholesaler
great.
for that area for you.
Excellent. And then the last question here, for your value protection IUL, do you have to have your Series 6 and 63?
I believe so, because it's a variable product. Is that you agree with that, David?
So for the value protection IUL that was on the screen, that's actually a slightly different product. That's more of a current assumption product that we do offer, and we can get you some information on that if you're interested. But the VUL Defender product, which is the one that is closely matching up against VUL 1, that is variable, so that would require your securities license in order to sell that one.
Okay. All right, great. All right, so Michael and David, once again, thank you both so much for the information that you just shared. I know that once again, like I said, I talk to our agents all the time, and they are definitely looking to go in the direction as far as IULs. And truth be told, Securian Financial is a company that that a lot of them were not fully aware of as far as your strength is concerned. So we definitely want to change that today. Before we do close out, Michael and David, is there anything that you want to say in closing?
I just want to thank everyone again for letting us come on the line and talk. Like I said, our wholesaling model is a little bit different. Obviously, my goal is to get out there and meet more people. Just the main thing is utilize our home office. We have so many resources available for you to help you with everything. Don't search around. Don't get frustrated. Just call our case design, email, call me, your case managers, anything that you need. I mean, we have it, and I would just say to utilize what we have. Make life easier.
Awesome. All right. So for both of you, once again, Michael and David, thank you for your time this morning. It was a great presentation, a lot of great information. And once again, I want to thank everyone for taking time out of your day to join us. Hopefully you did learn something new. If you are not currently appointed with Securian, please go into your online contracting portal, Insurance Bay, and request an appointment. This is a company, these are products that you want to have in your back pocket. Also, I want anyone, if you're having any questions or issues as far as contracting, please contact our producer support at messerfinancial.com, or you can reach out to them at 866-568-9649, extension 7813. Also, take a moment to check out our events calendar at messerfinancial.com, and we will be having webinar workshops scheduled throughout the year with valuable information like you just heard. And once again, thank you all for joining us today, and please take care of yourselves and everyone around you. Have a great day.